Hello and welcome to Your Daily Five for the 18th of May. My name is Julius de Kempenaer, presenting to you from Amsterdam in the Netherlands, and it is my turn again to host today's episode of Your Daily Five. I'm a senior analyst here at StockCharts.com and the creator of relative rotation graphs. And of course, they play a crucial part in my approach to pick 5 interesting names for you. You can find my contributions in the RRG blog on the site, as well as on StockCharts Television, where I host Sector Spotlight every Tuesday from 10:30 to 11 a.m. Eastern. My starting point for today is the relative rotation graphs for the 11 S&P sectors. Just to have a little bit of space, I have disabled the tail for the energy sector, which is way to the right. And the tail that I want to focus on is the one for Communication Services, XLC, which is the lowest reading on the RS ratio scale, just inside improving and moving at a positive RRG heading, which means that it's going up on both the momentum scale and the ratio scale. Now, the tail is not that long, which means that there is not a lot of power behind that move yet. The thing is that it's a sector that has gone through a very weak period for many months already, and it still is a weak sector in terms of relative strength and also in terms of price. However, when I was recording Sector Spotlight, which aired yesterday, so you can go back and watch it if you want, I noticed on the XLC chart that the price of XLC has reached a major support level, which is formed by the peak prior to the, let's call it the COVID crash. It hesitated a little bit before the breakout, and then it was testing that former resistance as support, and it's now coming back. That's one reason why it got me interested. Now, the second reason is, and I'm not a really big user of Fibonacci retracements, but I was watching this rally and I thought, hey, what would the retracement of that move be? And when I pulled up the Fibonacci retracement tool and I overlaid it on the chart, lo and behold, it's 61.8%, almost to the dot, 56.5, which is like pretty much where the low was. And in terms of relative strength, you can see that the speed of the decline is slowing down, and that's why the green RS momentum line, the JDK RS momentum line, pulled up towards the 100 level and is now gradually starting to rise, and it's slowly starting to pull the RS ratio line up. Now, this by no means a turnaround in trend, nor in price, nor in relative, but what I'm noticing is a slowdown. And when you have a massive decline, when you had a massive decline or a big decline, as we've been experiencing in the market very recently, at some stage you got to start thinking about your shopping list. And that's what I'm doing here. I'm thinking about my shopping list. I'm thinking about what could be interesting stocks to look at once things start to turn for the better in the market, for the market in general. And I think that the communication services sector could be one of the sectors that will show some early signs of improvement. So my next step was to pull up the members of the communication services sector and put them on an RRG, and then this is what you get. Obviously, the tail for Facebook immediately stands out. Netflix in negative way. Twitter also in a positive way, although I just try to stay away from that. There's too much going on there, and a few more. And I've actually filtered them out for you. I've filtered 5 names that I want to go over and I want to stick in my daily 5. And it's this set of stocks. Two from a negative point of view, because I think it's very important to realize that not everything's going up, and even within this sector, it's an important sector. It's 2 names that I better think should be avoided, and a very important one is Google. That is a stock that is on its way to the lagging quadrant. It's underperforming, and I wrote an article on that not too long ago in the Don't Ignore This Chart blog, somewhere in April, when it was still at 25.60, and I said when it breaks below that support level here, then we're facing a decline towards 2000. We're not there yet, but we're well underway. The other one is Dish. That's the Dish network, and if you look at the tail there, you can see that is rotating and it's starting to shoot back into the lagging quadrant. That's from the weaker point of view. And then we've got Facebook, which is at a nice long powerful tail pointing higher. We've got EA, Electronic Arts, rotating back towards the leading quadrant. And then there is AT&T, T, which is almost at a 45-degree angle, pointing towards the leading quadrant. So let's go over the 5 stocks that I picked for today. So the first one I already gave it to you. That's Google. You see the price pattern, the price peak. That's the decline is underway. We're resting around 2,200. I think that 2,000 is definitely in sight. And if you look at the relative strength, there is a big top in place, and it looks as if we're going lower. Both RRG lines are pushing further down below 100. That means going towards the lagging quadrant. Then there is Dish. That's the other one. And you can see that it is resting at a very important support level. We're breaking through horizontal support on the RS line, on the relative strength line. And the most important thing, I think, is what you see when we switch to a monthly chart. When I do that, then you can see how important that support level is where we now are. If that gives way, we could go all the way down to the lows of 2008 and 2009. That's just about $7, and relative strength is not helping very much here. So Google and Dish better be avoided. Now, the good stuff is coming, and the first one is Facebook. And why Facebook? Because it is bouncing. It seems to be putting in a new support level around 185 with a little peak below, but 185 seems to be holding. That is causing relative strength to slow down and move sideways, and that's starting to pull the RRG lines right up, putting Facebook inside the improving quadrant and starting to move nicely towards the leading quadrant. So that's the one that's on my shopping list, especially when it can complete this bottom formation. Second one is EA. It's in a broad range. We just tested support, and if you look at relative strength, we are breaking out of this downtrend, and RRG lines are starting to move higher, pushing EA back into the leading quadrant. That's the second stock that is on my shopping list as a potential buying candidate when things start to improve for the entire market, or maybe as an early call right now. And of course, we saved the best for the last, and that is AT&T. It's also in a broad trading range. We've hammered out solid support around 17. We rallied strongly off that support level, off that bottom of that range. And you can see that today, I'm recording this after the close on the 17th. So it's yesterday when you're watching this. We are breaking above that resistance level. Now, this is a weekly chart, so it should actually be there at Friday's close. But this is a good start. Breaking above that resistance area already right now. Combine that with a turnaround in relative strength and strongly up moving RRG lines, and it looks as if the way up towards at least 23 and a quarter is wide open for AT&T, making it one of the stronger stocks inside the communication services sector, and one that is certainly on my shopping list.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.